Good morning. Is it on? That's just me. Oh, hello? Okay. Good morning, everyone. I'm Joe Antos with the American Enterprise Institute, and I want to welcome everyone here in our conference room and everyone watching through electronic means to a conference today addressing the general and very specific question also of stabilizing the health insurance market under the Affordable Care Act, and in particular a proposal made by a group of 8 governors who will actually be following the panel. Now, you may wonder why we have the governors speaking after us, and the answer is travel considerations. But fortunately, although this panel is certainly not obligated to confine their remarks solely to the governor's proposal, fortunately the governors did put out a letter last week that is really quite easy to summarize. So I'll start off by summarizing their major points so that everyone has a basic grounding in what the governors are talking about, and to some extent a basic grounding in what the panel will be talking about as well. So they identify really 3 categories of actions that could be taken. Immediate federal actions to stabilize the markets, and then other types of reforms that address coverage, that address cost, and that address what they call very politely the federal-state partnership, which oftentimes is one might think is a bit more aggressive relationship than a partnership. Having been an employee of what is now called the Centers for Medicare and Medicaid Services, we dealt with state waivers, and partnership wasn't always the word that came to mind when we negotiated with the states. Okay, so here are their major proposals on stabilizing the individual or non-group insurance market, the market that is subsidized through the Affordable Care Act, through the exchange process. So their major proposals are to, the one that everyone says, fund cost-sharing reduction payments, create a temporary stability fund, offer choices in underserved counties, and what that means is to come up with a way to give people an insurance option where there might be none or maybe only one health plan available to them. Those are often rural counties. And then they also say that they would keep the individual mandate until something better came down the road. Other proposals that are a little bit longer term, they talk about encouraging more enrollment in the exchange plans. Everybody always talks about enrolling more younger, healthier people. They don't really have a proposal for that. And of course, you have to make insurance more affordable, but they don't define that either. Promote appropriate enrollment. I think this is a serious set of ideas, because it's something that the insurance companies that have been dealing with the exchanges have been grappling with for several years now. And that has to do with the grace periods. People don't have to pay premiums potentially for 3 months, and other kinds of rules that have encouraged some people to go in and out of insurance rather than staying continuously covered and paying their premiums, which is, after all, the basis for insurance. If you can go in when you need it and you come out when you don't, that's not insurance. That's just a subsidy. And then stabilizing risk pools, reducing costs through coverage redesign, which I really think they're considering what states would do to modify some of the insurance rules, as well as what the federal government would do. And then finally, some frankly old gems. Let's improve the regulatory environment. That's always a great idea. Support state innovation waivers. There's a waiver authority in the Affordable Care Act, and some people have argued that Congress should require that HHS move quicker in approving waivers, and I think that's part of this. And then various ideas for cost containment. So that's basically the proposal. I think it's kind of interesting. I'll make a few quick remarks and then introduce the panel, and we'll take it from there. I think it's kind of interesting that, at least from Republican standpoint, most of this year was the phrase was repeal and replace. And now the phrase, even among Republicans, is stabilize. But what does stabilize mean? Well, it's the politically correct term for repairing Obamacare. So that's the rude way of putting it, but that's basically the story. A lot of the problems that we see in the non-group or exchange market is the direct consequence of the design of the Affordable Care Act. Mistakes were made in drafting that bill 8 years ago or 7 years ago, and those mistakes have been retained. Even in situations where mistakes were finally realized, the previous administration, fearing, I guess, the political fallout, chose not to go to Congress to make adjustments that clearly are needed, were needed then, are needed now, will be needed in the future if they're not made fairly soon. Furthermore, instability. Well, of course, we saw plans dropping out before this year. They were typically were the big name plans in markets that they didn't previously really operate in. Many of the big employers specialize in insurance sold through large employers. And if you're not in the individual market, you have to create a whole new set of financial and business relationships with healthcare providers, hospitals, and so on. You have to figure out how to market, because that's an entirely different situation. A lot of these plans, after a few years, realized this wasn't going to work for them, and they dropped out of many of the markets that meant losing a tremendous amount of money. So, but this happened before. This was not an invention of Republicans, and certainly wasn't anything that Democrats wanted. This was basically a failure to design a very complicated policy perfectly the first time. And that's not a criticism, that's reality. It's very difficult to get these things right the first time. And so the failure to accept the defects and deal with it in a way that might not have been politically advantageous leaves us with, frankly, something of a mess in this particular market. Anyway, we will address many of these issues. I'm sure I have annoyed many of my colleagues here to my right, and I'm sure that was accidental, wasn't it? Let's see here. I have my cheat sheet to make sure I identify everyone properly. Okay, so let me introduce the panel, and I'll introduce people in the order in which they will speak. First, we have Cori Uccello, who is she's an actuary and a senior health fellow at the American Academy of Actuaries. Next, we have Topher Spiro, who's vice president for health policy and a senior fellow at the Center for American Progress. And the Center for American Progress and AEI are jointly sponsoring this, as you know. And then finally, Ovik Roy, who is the founder of the Foundation for Research on Equal Opportunity, formerly with the Manhattan Institute. So with that, try to keep it to 8 minutes, but if you go a little bit longer, I will be clearing my throat. Take it away.
All right, well, thank you, Joe, and good morning, everyone. So I'm going to step back a bit and set the stage and talk about a few things. So first I'll talk about what's necessary to have a stable and sustainable individual market. Then we'll look at how well the current individual market is stacking up according to those criteria. And finally, I'll talk about some actions that can be taken to stabilize and even improve the marketplace. So what's necessary in order to have a stable and sustainable individual market? Well, first we need enrollment that's high enough to reduce random fluctuations and a balanced risk pool. Because the ACA offers pre-existing condition protections, we need to have enough healthy people in the pool over which the costs of the sick people can be spread. Second, we need a stable regulatory environment that facilitates fair competition. And that means not only having a level playing field in which all the insurers who are competing to enroll the same people operate under the same rules, we also need to have rules that are consistent over time and are known in advance. And I think we've fallen a little short on a couple of those. Third, we need enough participating insurers and plan offerings so that there's insurer competition and consumer choice. And finally, we need, because the majority of premium dollars go toward paying medical claims, we need to have slow spending growth and high quality of care. And I'm not going to talk more about that, but I think I'm encouraged to see that's really getting a lot more attention. It is noted in the governor's plans or proposals, and the last 2 days of Senate help hearings, that issue has come up a lot. So how is the current market doing according to those criteria? Well, enrollment in plans has been lower than expected, and the risk pool in general has been sicker than expected. That led to, especially in the early years, premiums being too low relative to claims, which led to insurer losses, and then ultimately, as Joe mentioned, to some insurer withdrawals from the market. Recent signs, however, suggest that that insurer experience is stabilizing and even improving in some cases. Nevertheless, the market does remain fragile. The big challenge right now is uncertainty, and there are really two sources of that uncertainty. First is what Joe has mentioned, is whether or not the cost-sharing reduction payments will be made to insurers, and two, whether the individual mandate will be enforced. Both of these are causing uncertainty for insurers, which is causing some premium increases, as well as insurers being more hesitant to enter or continue participating in the markets. So those are the challenges. What can we do about them? Well, the first thing is, and the priority, and I would call this the number 1, 2, and 3 priority, is to pay the CSRs, pay those cost-sharing reduction reimbursements to insurers. Not paying them would cause premiums to go up on average 20% or even more. And with those premium increases, the federal premium subsidies, the spending that the government makes toward those premium subsidies would go up. And CBO estimates that the increase in federal premium subsidies, that federal spending would go up if CSRs are not paid, because the government would be paying more toward those increases in premium subsidies than they'd be saving by not paying those CSRs. And I think the good news is there does seem to be broad consensus that, or not, fairly broad consensus. I'm trying to be optimistic.
It's bipartisan.
There is some bipartisan, I'm going to call it consensus. Make it so, that these need to be paid. Second thing that can be done is to enforce the individual mandate. I know that's not a popular thing to say, but especially, again, with the pre-existing condition protections, it's important to encourage healthy people to enroll in coverage. The individual mandate helps do that. I know that some alternatives to the mandate are being explored, such as requiring continuous coverage. Concerns about that are that it's not clear, and it may be difficult for continuous coverage requirements to do enough to encourage healthy people to enroll sooner rather than later, while at the same time continuing to offer those pre-existing condition protections. Auto-enrollment is another idea that's been getting more attention. Auto-enrollment has been successful in encouraging enrollment in other programs, in particular 401k plans. I think it's more difficult to incorporate auto-enrollment into the individual market for several reasons, one of which I just think that the logistical hurdles that would need to be overcome, I think it would be pretty difficult to do. Not only do we need, at this point, to enforce the mandate, but it also needs to be publicized. At this point, I think there's a lot of confusion among consumers about whether that mandate is actually still in effect. So publicizing that, getting the word out, I think is an important part of the mandate structure. And that leads me to the next action that can be taken, and that's continued and improved enrollment outreach and assistance. Publicizing, getting more information to consumers about their coverage options, their potential eligibility for premium subsidies, helping them walk through the enrollment process itself. All those things help encourage enrollment, and it kind of works hand in hand with the mandate in terms of getting healthier people to enroll sooner rather than later. Sick people have said the sick people are going to find a way to get coverage. It's the healthy people we want to make sure get in the pool. And one thing to keep in mind, too, is that, again, the mandate and this outreach, they work as well as the premium subsidies, all work together to encourage healthy people to enroll. If you kind of weaken one of those, you increase the need for the others. So if you weaken the mandate, it requires an even more robust enrollment outreach, and vice versa. Ideally, you'd have both. The next thing, possible improvement, is to, as the governors have included, provide some external stability funding, for instance, through a reinsurance plan. What a reinsurance plan would do is offset some of the costs of an insurer's high-cost enrollees. As a result of that offset, premiums would be lower. Lower premiums could entice more people to enroll. And if the federal government were to fund such a reinsurance program, stability fund, it would partly pay for itself, because the money going in to pay the reinsurance by lowering the premiums, again, would lower the premium subsidies. So it would lower the outlays the government would have to make for those premium subsidies. And finally, it's important not only to do things that would improve or stabilize the market, it's important to avoid things that would undermine or deteriorate the market. So doing things like allowing the purchase of coverage across state lines, expanding the ability of association health plans, allowing more people to buy non-compliant coverage, such as those short-term duration plans. All those kinds of things would fragment the market. The healthy people would go to these alternative coverage sources, these non-compliant sources. So who's left in the compliant plans? Well, the sicker people. What happens? Premiums go up. Ultimately, people with pre-existing conditions, either now or who attain conditions in the future, could find it more difficult to find affordable coverage, or even coverage at all, if insurers decide to withdraw from that market. So I'll leave it there and turn it over to Topher.
That's incredible. You're on time. We don't usually have that here.
I'm an actuary.
One observation I would make for people who don't spend all their time in Washington, it's what you said is, of course, completely correct, but I think that people who don't pay much attention to this, they're hearing, well, the government says that if you spend more money, it'll save money. It sounds like the perfect government policy. And indeed, just to understand what the mechanism is, the ACA premium subsidies basically go up dollar for dollar with premium increases. So if, and I don't think you explained this, but just a quick thing here, that if the—
That's how I stand on time. I let him do all the
explaining. If the cost sharing reduction payments are not made, which is probably around, what, $8 billion a year or so these days, something like that, that then inevitably the premiums have to go up. But when the premiums go up, so do the subsidies. So the people who are subsidized will generally not see an increase in the premiums they pay. There are losers in this. There are two losers. There are the people who aren't subsidized, who are buying on the exchanges or on the individual market, and they're going to drop out probably more likely than not. And then, of course, the other losers are always turn out to be the taxpayers, but let's forget about them. Topher?
Well, first, I just want to thank Joe and AEI for partnering with CAP, Center for American Progress, on this important discussion. I think it's an example of people, organizations working together in a polarized environment with different perspectives, having an adult conversation. Can we call it an adult conversation?
We're over 21.
Okay, all right. Civil conversation.
Yeah, that's better.
Okay. I'm really here today. I want to applaud Governors Kasich and Hickenlooper for their leadership. They have put partisan politics aside for the moment, and they have really identified the problem and are targeting solutions to fix that exact problem. The basic problem is one of policy uncertainty. And if you look at all the data and evidence, Joe, what's been happening is that the markets had been stabilizing. If you look at measures like medical loss ratios and margins of insurers, they were on the upswing. And that dynamic may not have been happening as quickly as we would like. So we would like to accelerate that process. But then Trump came along and started to sabotage the markets, and I'm not going to go through all the ways in which he has done that. But that's the basic problem that we're trying to address. The Kasich-Hickenlooper plan is a major step forward because it targets that problem like a laser beam without massive cuts to Medicaid, without tax cuts for the rich. And as the American Medical Association has pleaded with Congress, first, do no harm. So they're doing no harm, and they're trying to solve the problem. Their plan includes the two basic pillars of any stabilization policy. Number one, guaranteeing the cost-sharing reductions, and number two, reinsurance. I'm going to take those in turn. On cost-sharing reductions, every nonpartisan expert who has looked at this, including CBO, Kaiser Family Foundation, Corey, has estimated that eliminating those payments would spike premiums, rate shock, by 20%. And the important thing to realize here is it's not just eliminating those payments. The mere threat of doing so is already having an impact. This week already, in fact, Optima Health announced that it's withdrawing from the market in Virginia. It cited the uncertainty over cost-sharing payments. And as a result, 70,000 Virginians are left in the lurch. They have no plan as of right now to enroll in. That's a big problem. Anthem also this week said that it would pull out of Maine if the cost-sharing reductions are not guaranteed for 2018. The public, I think, fully understands what's going on here. They have seen the threats from President Trump. They know that Republicans are the party in power, and Republicans will be blamed if they do not govern here and fail to fix this problem. On reinsurance, as you probably know, it's a technical term for subsidizing the costs of high-cost patients. This makes a lot of sense because we know that the vast majority of healthcare costs are concentrated among a very tiny sliver of the enrollment population. So it makes sense to try to address that, spread out those costs. It's a solution that has been proven to work in the real world in both Alaska and Maine, and those states are important because 2 senators sit on the HELP committee. Reinsurance has already worked to lower premiums significantly. And in the case of Alaska, the Trump administration actually put its seal of approval on reinsurance and agreed to provide funding for the state's reinsurance program. So it doesn't have to be a partisan thing. The most recent example is in Minnesota, where Republicans in the state legislature were the ones actually who spearheaded the plan. It was later signed by Democrat Governor Mark Dayton, but it was really spearheaded by Republicans, and it's just been put into place. It has just lowered premiums by 20%. So we know this works. Why wouldn't we do it? Senator Alexander has raised a concern that it would be difficult politically for him to add money to the bill that he's working on. However, there's no reason why it needs to add money to the bill. It could easily be paid for. Reinsurance acts to lower premiums and thereby lower premium tax credits. So actually, a $15 billion program on paper would actually end up costing probably only $4 billion. And I'm confident that Joe and I could come up with $4 billion to pay for that. So there's no reason why.
Yeah, fortunately, we're not in Congress.
Yeah. So there's no reason not to put it in the bill. Aside from cost sharing reductions and reinsurance, if you want to go further, there is this need for an emergency policy for these people who might be stranded in Virginia, people in Bexar counties. And there, we have suggested, the governors today in their plan suggested allowing people to buy into the federal employees health benefits program. That's a type of policy that would work to fill immediate gaps until the other policies have a chance to improve underlying market dynamics. As we've seen in the bipartisan hearings this week, the governors, the insurance commissioners, they pretty much all have consensus around these policies, the basic pillars that I mentioned. We know they work. We know that CBO would say they work. We know that nonpartisan experts say they work. There's no reason not to do them. Over the short term, this is our immediate focus, to bring certainty and stability to the markets. This plan, these stability measures, they're not what I would like to see over the long term. They're not what OVIC would like to see over the long term, okay? So, but there's no reason why we should let that prevent us from moving forward to provide immediate relief to patients who are literally living in fear right now. So that's got to be our immediate focus. I'm willing to put aside what I think should be done over the long-term plan, and I hope Republicans and conservatives are willing to do the same. Over the next 22 days, the Senate has a choice between 2 paths. One path is what is perhaps the most severe repeal plan that we've seen yet, which would cut ACA funding by 1/3 by 2026 and to 0 in 2027. That's the Cassidy-Graham plan. The other path is this bipartisan approach. And I really think that that's the right way to go. Number one, Republicans would avoid the political fallout of insurers immediately withdrawing from the markets. Number two, it's what the American people want. If you look at poll after poll, vast majorities want Republicans and Democrats to work together. Half of Trump supporters agree with this. And number three, if both parties are invested in a solution, they both have an incentive to make it work. imagine how healthy this would be. It would be healthy for democracy, be healthy for the Senate, be healthy for public discourse. Maybe we could stop using healthcare as a political weapon. And it would, of course, be healthy for the markets and healthy for the American people. Thank you.
So you're supporting preventive health care then, is that right?
Sure.
Okay.
Well, first of all, let me thank Joe and Topher and AEI and CAP for having me here today. It's particularly a pleasure to be here at AEI because my new think tank, the Foundation for Research on Equal Opportunity, was inspired in large part by Arthur Brooks, the president of AEI, who has called on all think tank scholars to focus their work every day on how we can make a difference for people who are poor, who are lower income, who are struggling in the economy we find ourselves in today. And that is the central mission of the Foundation for Research on Equal Opportunity. Our work, every scholar we hire, every white paper we publish has to center its ideas, its reforms around policies that can move the needle for people with below median incomes or net worth. And of course, healthcare is a natural focus for us because there are a few issues where the economic mobility and the wage stagnation in the United States is most affected or most impacted by than healthcare, right? What are some of the biggest problems? If we step back again, we're talking about healthcare here. Why do we talk about healthcare? There are two big problems with our healthcare system. The first is that for tens of millions of Americans, they can't either afford health insurance, or while they have coverage, that coverage is so costly that they're struggling to make ends meet even though they are covered. That's a huge problem. The second problem is the fiscal sustainability of our public expenditures on healthcare, which are, on a per capita basis, higher than all but 2 other countries in the world prior to Obamacare. And Obamacare has increased that per capita spending substantially. So we have a fiscal train wreck, a debt and deficit crisis that's entirely fueled by growth in healthcare spending, public healthcare spending. And we have an affordability problem that's driven by the high cost of healthcare. Both of these problems effectively are about the high cost of healthcare. In that context, what is the Kasich-Hickenlooper plan? The Kasich-Hickenlooper plan is not a health reform plan. It's an anti-health reform plan. It's a consolidation of everything that's right or wrong about the healthcare system we have today. So if you believe the healthcare status quo is great, if it's working for you, you're going to like the Kasich-Hickenlooper plan. But if you're very concerned about the affordability of our healthcare system for the individuals who are struggling to afford care, or the country as a whole, our grandchildren who are going to have to pay the bills of the debt and deficits that we've piled up over these several decades, the Kasich-Hickenlooper plan does very little. 2.5 years ago, when John Kasich was running for president as Republican, he may not be doing that the next time he runs, he said that he wanted to repeal Obamacare because it increased costs and was a top-down solution to our healthcare system. In the document that he published with Governor Hickenlooper a couple days ago, he said that the role for the states was, there was an appropriate but limited role for the states in designing their health insurance markets, that authority properly resided in the federal government. He says that federal requirement that you should buy health insurance should continue until some theoretical solution that he approves of later may come into being, even though there are plenty of alternatives to the individual mandate that have been discussed and debated for many, many years that would work and that insurers believe would work to make health insurance work. So let's step back here in another way. We've talked a lot about stabilizing health insurance markets. But you know what's funny? Is we haven't talked about why insurance markets were destabilized to begin with. Why were insurance markets destabilized over the last several years? They were destabilized because the Affordable Care Act imposed a series of regulations on the market for people buying health insurance on their own that over the last 4 years has on average doubled individual market premiums on an underlying basis. In year 1, it was 47% on average. And that's on average. If you're younger, if you're healthier than the average person, your premiums tripled and quadrupled. So we're hearing people say, oh, well, it's really terrible that premiums might go up 20% if we don't fund cost-sharing subsidies. And we should fund cost-sharing subsidies to stabilize the market because there's two ways to do it. Insurers have a real case. Insurers are saying, hey, the Affordable Care Act requires us to pay out these cost-sharing subsidies regardless of whether Congress funds them or not. So if Congress doesn't fund them, insurers will have to fund them, and they'll make up their losses on those cost-sharing subsidies by charging other people more money. So, insurers are understandably very concerned about this problem, and because insurers can afford high-priced lobbyists, Capitol Hill is very concerned about this problem. But let me tell a story about a woman named Ashley Dion, a 29-year-old graduate of the University of Michigan. Prior to Obamacare, she had a plan that cost $75 a month. The health insurance plan cost $75 a month. She works nights to make ends meet. She's not super poor. She's what we might call the working poor, the working class. After Obamacare came online, her premium went from $7,500 to $319 a month. No individual mandate, unless the penalties are like imprisonment, is going to force her back into the market. But there's no high-priced lobbyist pleading her case on Capitol Hill. And we talk about stabilizing the health insurance markets. What are we actually stabilizing? We're stabilizing a market in which some people, let's call it 10 to 15 million people, are getting subsidized coverage in the Obamacare exchanges. And those people, some of whom are being helped by Obamacare, some of whom their premiums are actually lower under Obamacare than they are even when you take the subsidies into account today. But some people are being helped by that subsidy structure. And we should have a tax credit structure to help the uninsured buy coverage. Republicans do believe that. The Better Care Reconciliation Act, the Senate bill, did have a means-tested plan for the uninsured to buy coverage in the individual market. But what stabilization will also do is it will consolidate the losses of the people who are being priced out of the individual market today because Obamacare has doubled premiums. So we can talk all we want. When people use euphemisms like, well, we need to have balance in the risk pool. Well, the reason we don't have balance in the risk pool in terms of healthy people enrolling is because Obamacare regulations have doubled and tripled the cost of those younger and healthier people coming in to the insurance market. So yes, we should fund cost-sharing subsidies, as we have. Actually, the Trump administration has funded them. But it's not fair, nor is it economically justified, to focus solely on subsidizing cost-sharing for insurance companies without actually addressing the underlying problems that destabilize the insurance market in the first place. The regulations that have penalized young and healthy people who want that basic financial security of knowing they won't go bankrupt because of medical bills. And there are specific things we can do now. We don't have to wait 2 years to study the problem. We've been debating this for decades. There are things we can do now, paired with cost-sharing reductions, that would allow us to truly achieve stability in the individual market. And that doesn't mean doubling the mandate or imprisoning people for not buying insurance. It means allowing younger and healthier people to buy actuarially fair premiums for them. So, for example, one thing we could do, we have this thing in the ACA called age bands, where younger people are effectively forced to double or triple the premiums they pay to buy health insurance under Obamacare. In theory, this was supposed to lower costs for older people. It hasn't. Older people's premiums have doubled under Obamacare. So if you actually, paradoxically, allow younger people to buy actuarially fair premiums that are appropriate for their age. So if you're 27, you're consuming on average about $700 to $1,000 a year in health care, your health insurance premium should resemble that. Not $300 a month, but more like $75 a month. You can do that while still having means-tested tax credits to help lower-income older people or sick people, have reinsurance, all these other things, to help the sicker and older people buy coverage. You don't have to penalize young and healthy people to help older and sicker people buy coverage. You can do both at the same time through direct subsidies rather than through regulations. So subsidies, yes. Regulations, no. Regulations, particularly at the federal level, the one-size-fits-all approach that John Kasich claimed he used to oppose, that's been the thing that's destabilized insurance markets. And what the bill, the John's proposal, Kasich, Hickenlooper, and a lot of the other proposals that have been out there, all they do is say, let's throw more money at the problem without addressing the things that actually destabilize the market in the first place.
Thank you, Ovik. Your points also really bring us back to the challenge of doing something sensible in a situation where the Senate, they don't really have 20 days or whatever you said. It's more like 14 days that they're going to be in session. And between very limited time to do anything this fiscal year, plus the searing wound, partly self-inflicted on Republicans, that really suggests that they don't want to go back there. So I think some of the discussion around the Senate help hearings basically boiled down to, well, we're not too sure we can do anything. We're not too sure we can do anything by the end of the month. It's not that we shouldn't do something by the end of the month. It's just that it's just too hard. So I think that's another major factor in all of this. Everybody can have their prescriptions, but actually getting anything passed at this point, since path dependence is where it's at here in Washington, I think is, I don't want to say impossible, but implausible.
To answer that question, I think, Joe, what we've seen is that when things are hard, who wins? Lobbyists, right? So the things that we are doing in Congress, the things that industry has prioritized, not the things that affect real people.
Yeah.
Well, I mean, Senator Alexander has always said, and I think this is right, that the only chance for anything happening is to keep it very narrow, very targeted, very focused. So, you said that you supported funding the cost-sharing reductions, but you're not willing to do that without your long-term vision also being put in place.
I don't think of it as a long-term vision. I think of it as a short-term vision.
Well, you want to rehash, relitigate the BCRA, and instead of doing something very targeted.
That isn't what I said. So I said, let's have some targeted reform, regulatory reforms that lower premiums for people this year, next year, 2019 plan years, in concert with cost-sharing reductions. To only focus on cost-sharing reductions doesn't address the underlying problem, which is that premiums have doubled in the last 4 years.
But all those things are things that are in the BCRA.
Well, just because they're in the BCR doesn't mean I'm saying let's bring back the entire BCR. I'm saying let's have some targeted provisions that focus specifically on lowering premiums in the individual market.
Yeah, I mean, we got to remember that there were other factors in the BCRA that killed it. Medicaid, for example. That was going to be a tough call, certainly in the Senate, maybe even more so than the House. And I think plausibly that was the issue.
Yeah.
So if you focus on the individual market, then the mountain is still pretty tall, but it's not Mount Everest. It's the Appalachians.
Yeah, but for example, when we're talking about, for example, flexibility with 1332 waivers, if we're talking about violating the guardrails that are in the ACA that provide protections for comprehensive coverage, for coverage numbers, for benefits, then that's something that Democrats aren't going to agree to. It's something that was heavily litigated during the debate. So that's what I mean when I agree with Senator Alexander, we need to keep it very narrow and focused. I don't think the essential health benefits are the driver of premium increases. Maybe our actuary can weigh in on this, but I think it's empirically false to say that the premium increases, the instability is caused by ACA regulations. It's what happened was with the introduction of a new market, insurers initially underpriced their premiums. They weren't in line with costs, and so the premiums this year, and then you had the phasing out of reinsurance and the Republican sabotage on risk corridors. What you saw this year was a correction in pricing that is now stabilizing the market, which you've seen through data, actual data, on improvements in medical loss ratios and margins. So it's really this Trump wrench thrown in the works that is the cause of the immediate problem.
So, it does make me wonder why some of the big insurers chose to go into the exchange market in the first place, where they hadn't operated at all before. It does make you wonder about that. Now, could it have had something to do with politics? Maybe. You could point to the tax on medical equipment suppliers as a good example of how politics works. I mean, one of the failures of the Trump administration is that they, frankly, aren't as brass-knuckled as politicians usually are in Washington. And by the way, I'm not just talking about Democrats. Republicans and Democrats generally will clobber you unless you go along with what they have in mind if they are actually in power. So that's not a criticism of the Obama administration. So in fact, we have a situation where we had a fair number of markets. We had insurers that should never have been there in the first place. We're there for political reasons, and you're absolutely right when you said the market was stabilizing. But stabilizing from what is the question?
And Joe, there's a certain amount of revisionism going on here because one of the reasons, along with all the regulations that drove up premiums, that markets have been so unstable for the last 4 years, is because the Obama administration was selective in its enforcement of the rules that the ACA laid out. The Obama administration basically made the individual mandate optional and made it easy to get around, basically didn't enforce it. Same with the employer mandate, same with some of the grandfathering rules, same with some, and so insurers were in a situation, they were pricing plans based on the rules that the ACA laid out, not underpricing them in some reckless way. They were pricing the way the rules were laid out, but the Obama administration actually changed the rules due to political controversies that stem from the fact that premiums doubled over the last 4 years, and they wanted to provide some sort of stopgap relief from that by relaxing some of their regulations ad hoc. So this was not Trump sabotage. This was the Obama administration, you could argue, sabotaging its own law. And I'm glad that Topher brought up the point about 1332 waivers. So, I take him at his word that Democrats have no interest in changing the way that these 1332 waivers work. But it's actually
important. I didn't say that. That's not what I said.
Okay, well, I'll let you characterize your views, but let me make the point that I'm going to make here, which is that the 1332 waiver process is broadly useless. Basically, what it says is that states have some theoretical ability to not have an individual mandate and an employer mandate, but they're required to keep all the other regulations in Obamacare. And their waiver will only be granted if they can prove, if the CMS, the Centers for Medicare and Medicaid Services actuary, certifies that such a policy mix would result in equal or more people having coverage than do today. Well, that's never going to happen, right? You can't design a policy in which there's no individual mandate, all of Obamacare's regulations stay the same, and more people have coverage than do today, or an equal number. So the 1332 waiver process, which a lot of people are putting up there as this fig leaf to say, hey, I support state flexibility, it's a mirage. Yes, there are a limited number of things you can do with 1332s, of which the Alaska Maine model is one, and I think the praise should go to Alaska and Maine for coming up with some creative ways to do some things to stabilize their insurance markets. But broadly speaking, the 1332 waiver process will not work and will not allow states to have any sovereignty over their healthcare systems or health insurance systems unless the way in which the 1332 waivers are designed is amended by Congress to allow for more experimentation, more flexibility.
I mean, I think it's admirably honest of you to say that you're okay with coverage losses under 1332
That's
waivers.
not what I said.
Well, that is exactly what you said.
Not
you
what I
said
said.
There's no way that you could avoid...
With the regulatory mix,
well,
right? So you can modify the regulations in Obamacare or lighten them so that premiums go down. That makes premiums more affordable. When premiums are more affordable, more people will buy health insurance.
Okay.
So there are other ways to get health insurance.
So you're admirably honest on being okay with cutting out mental health care, maternity care, prescription drug benefit.
So Topher, you can put words in my mouth or you can listen to what I've actually said, which is that there are certain things we can do that lower health insurance premiums for everybody while still maintaining coverage for the sick and the elderly.
I don't know
what
those are. But
you can download Transcending Obamacare on our website and read it for yourself.
Yeah. I won't do that.
Well, then you're not interested in civil dialogue, which is
fine.
That
was admirably honest, Topher.
Yeah, doing my best to provide it.
But look, I do agree with you that that there are changes that could be made to the process of 1332 waivers, and I'm not going to sit up here and negotiate with myself or negotiate on behalf of Senator Murray, but I think that there are reasonable common sense changes that could be made to streamline the process. There are 1332 waivers that have been approved that are really helpful for reinsurance, as we discussed. I mean, do you agree that those have been helpful?
As I said, yeah.
So,
I'm fine with what Alaska made.
So, you know, I think what we're trying to get at here is what kind of changes would be okay in exchange for funding the cost sharing reductions. And for Democrats, I think it's you know, there are some changes that could be made, but violating the guardrails, saying that people can lose coverage, would lose benefits, I think is a non-starter.
Okay, so let's move to Corey. Do you have anything to add to any topic?
I hate to get into this mix, but did you all hear Ovik implicitly say the mandate is an important part of the law?
Wait, hold on a sec. Hold on a sec.
He also said that the Obama administration should have enforced it stronger, and he was calling for that at the time.
That isn't what. Yeah.
So moving on from that,
not what I said.
I'll also go back to my Pollyanna consensus of paying the CSRs. I think that there is consensus on that. I think even Ovik agrees, and I think that's a narrow proposal that there can be broad agreement on, and I don't even know why we need to find money to pay for it, because it costs more to not pay them.
Well, also speaking of nerdy Washington thought on this, of course it's free. Because it's in the CBO baseline. Now, remember that when anybody says in Washington it's free, check your wallet. You know, we're getting close to the end. I think we should give the audience a chance to interrogate us. And so, you know, give your statement in the form of a question. You know, that means at the end you kind of raise your voice. And before you start talking, identify yourself, and you get 1 minute before I interrupt you. So here's someone here.
Yeah, I'm from Consumers Checkbook.
You have to use the microphone.
I'm from Consumers Checkbook. We spent a lot of time looking at the consumer experience of a health plan. It is true that affordability is a significant problem. I would say one of the things that's not coming up in this discussion at all is that the individual market is a residual market. It's the one you get in if you can't get the generous insurance plan that come out of Medicare, the military, or your employer. So can we have some discussion? And I would say both parties have failed in altering that calculus. Can we have a little more discussion about altering that calculation, basically the tax subsidies and the direct subsidies under other plans, and sort of how they fit with this individual market setup?
There are two coherent approaches to health reform. One is to have a single payer approach where the government is the insurance company, the government is restricting access to expensive procedures and regulating prices. That's an economically coherent way to have a healthcare system, whether you philosophically agree with it or not. The other economically coherent type of system to have is a consumer-driven system, a patient-centered system, where the patients are choosing their own health insurance plans, and that competition is driving costs down and holding companies accountable for the prices they charge. We have neither of those systems today, which is the point that you're making. So that's why getting the individual health insurance market to work is so important. It's so important for people to be able to shop for the coverage and get good coverage and affordable coverage in the individual market, because without it, if you are an advocate for consumer-driven or patient-centered health reform, you're never going to get there without reforming that system first. And so
one problem of equalizing subsidies that nobody's talking about.
Well, no. Well, hold on a sec. So the Affordable Care Act and the Better Care Reconciliation Act, they use different approaches to do so. Both provide refundable tax credits to allow people to buy health insurance in the individual market, thereby, in a way, equalizing the subsidies don't work exactly the same way, but there are subsidies in the individual market to buy coverage. And I support subsidies to help people buy coverage in the individual market through tax credits. What I don't support are regulations that unnecessarily drive up premiums, making health coverage unaffordable for those who need it. And I also don't support, and we don't need an individual mandate to help people buy coverage. Now, I'm glad that we brought up the point of individual mandate, because this is something that John Kasich now is a huge fan of in this proposal that he's going to discuss later this morning. Nobody actually believes, nobody who's studied this seriously believes that the individual mandate is having a significant effect on the Obamacare exchanges. When the CBO says a lot of people will drop out of the market for insurance because there won't be an individual mandate. They're talking about people dropping out of Medicaid where there are no premiums. They're talking about people dropping out of employer-based coverage because they won't be forced to pay the premiums. In the individual market itself, because the premiums are already so high and the fines and the enforcement and the loopholes are so significant in individual mandate, it's not actually having much of an effect. Now, if you have a 1332 waiver where you can repeal the mandate, that's not going to have much of an effect either unless you can attack that underlying problem of lowering premiums and having some guardrails. So Corey and Joe brought up earlier, you could have a 6-month waiting period so that people can't drop in and out of the market. There are other things you can do. You can have late enrollment penalties. We do this in Medicare, Part C and Part D. There are lots of ways to encourage people to sign up for health coverage, such as subsidies. And there are lots of ways to discourage people from gaming that don't involve an individual mandate.
Okay. I'm told that we have to actually cut this off, which is very disturbing to me because we didn't get our full extra 2 minutes. In any event, I want to thank the panel for a spirited discussion. I would argue that this was the main event because there were more punches thrown here than you will see next.
Very good to see you.
Ladies and gentlemen, please remain in your seats as we transition to the next segment.
Thank you.
Thanks.
It was spirited, right?
This is what I like.
All right, can I grab my water?
Thanks.
Yeah. Thanks again for having me. Good. It was spirited, as you said, right?
That's what I wanted.
Yeah.
I'm going to be leaving. So thank you. But
You can sit up here.
I find people listen to Kasich.
Oh, God.
I mean, he used to be on the budget committee.
I know, in the 90s, yeah. He
I
was
mean,
the star.
He was the star.
Yeah, appreciate it.
My name is Nira Tandon, and on behalf of the Center for American Progress, we are very proud to co-host this event with the American Enterprise Institute, and I want to thank you all for joining this incredibly important conversation. At a time when our country can feel more divided than ever, CAP is proud to join this group in furthering a bipartisan discussion on strengthening the American healthcare system and improving the lives of families across our nation. At CAP, we firmly believe that our country must move towards universal health care. That's an important goal for all of us. That's because the ability to secure decent and affordable health care is a fundamental right which strikes at the core of our common humanity. But we also recognize that we need solutions right now. So as we strive towards fulfilling this long-term vision of universal coverage, we also recognize that America's insurance markets now face threats which demand immediate action, immediate bipartisan action. So that's why we are thrilled to be part of this conversation and strongly support a bipartisan approach for expanding security and stability in our healthcare system. Thankfully, we're seeing that many of our nation's leaders are now putting their duty to our country over their allegiance to any political party. Last month, Senators John McCain, Lisa Murkowski, and Susan Collins showed remarkable resolve in defeating an effort to repeal the Affordable Care Act. And this week, Senators Lamar Alexander and Patty Murray are embracing a return to transparency and established order by holding bipartisan hearings on how to stabilize insurance markets. And that spirit of cooperation, of reaching across the aisle to do the right thing, is what brings us here today. That's why I'm thrilled that we have Governor Hickenlooper and Governor Kasich, who have demonstrated outstanding leadership over the last several months in being voices for those people who have received health care and want to keep it. They've both spoken forcefully against partisan attempts to strip health care and making devastating cuts to Medicaid. And now they've come together in issuing an extremely constructive and targeted plan to restore stability in our healthcare markets. We're thrilled to be part of this effort. CAP stands strongly behind their ideas, their proposals, and this broader effort to reach across the aisle. So please join me in welcoming Governor John Kasich and Governor John Hickenlooper of Colorado.
Great. Well, thank you so much for joining us. My name is Sarah Cliff. I'm a senior policy correspondent at Vox, where a lot of the work I do gets into the weeds of health policy. And I have to say, this plan you guys put together is one of the more weedsy plans I've seen. You really are speaking my language. And we don't have a ton of time, so I want to get into some details. Governor Kasich, I'll start with you. You are a Republican who has campaigned on Obamacare repeal. Right now, you are backing this healthcare plan that, among its many features, encourages keeping the individual mandate. Why?
Well, it's initial, right? I mean, what I think the plan that we put together, I give so much credit to John's staff, Kyle, and my guy, Greg Moody. I don't know if he's here. I think he tries to stay out of sight so that I don't ask him to do any more. Look, we just want to get this thing stabilized. So we're willing to go with that. And John and I have talked about the individual mandate. The individual mandate, my God. I mean, what will be thought of me when I die, for an individual mandate, right? I mean, it's so silly. But here's the reason. I called John. I said, look, the individual mandate, we have it in Ohio for driving, for car insurance. 15% of our people don't have it. So just because you put it on the books doesn't mean you have it. Now, some want to stick with the individual mandate. We like the idea of continuous coverage. So if somebody doesn't have insurance and then they get sick and we all have to pay for them, when the time comes for them to reinsure, there'll be a penalty. That's the kind of way we think about this. Initially, we can stay with where we are, and then ultimately, we would like to design our own plan. And this framework that John and I have laid out is consistent with keep whatever you have, or you can make some changes within guardrails, because the guardrails are important. You don't want people to start being stripped of coverage or get some insurance policy that's sort of silly. You want them to be able to make sure that they can have the kind of coverage that they really need. And one quick example. Right now, the definition is you have to have comprehensive coverage. Okay, that's the Obama guidelines, which means you have to do all the essential health benefits. So you're 23 years old. we offer you a plan that gives you catastrophic coverage, a medical savings account, and access to primary care. To me, that's a definition of comprehensive. What else does a 23-year-old need? So we seek that kind of flexibility, and so I think it threads the needle in terms of giving states more power, but at the same time making sure they just can't do whatever they want. And if you want to keep what you have, you can. So that's kind of where this comes down for us, or for me.
Okay. And Governor Hickenlooper, I thought maybe you could start talking a little bit about where your marketplace is right now and what does Colorado look like if Congress takes no action in the next month?
So our marketplace in Colorado is about 5.6 million people. As a frame of reference, we have, as a result of the Affordable Care Act, about 600,000 people got coverage that didn't have it before. I think one of the things we agreed on right from the very beginning was that you got to look pretty carefully at every option before you talk about rolling back coverage. And that rolling back coverage can come in any of a million different ways, taking away this funding source or that funding source. We look at, in Colorado, just in that individual market, we're looking at over 200,000, given some of the proposals or some of the details of the Senate proposal, 200,000 people were at risk at a minimum, and it could have easily been more of that. And what we talked about, looking at some of the basic building blocks that could help stabilize these private markets, the cost sharing reductions. Don't just say we're going to keep them for 6 months or even 12 months. Let's go through 2019 so that insurance companies know what they can rely on. Just like any other business, they've got to have some level of predictability. Look at the reinsurance, and John was just talking about the challenges of a lot. It's not just young people. A lot of people, when they're sick, they'll get the insurance because we have to accept pre-existing conditions. But then when they're feeling a little bit better, they said, oh, well, I'd rather get that new sports car. Well, maybe their insurance isn't quite that expensive. The Apple Watch, thank you. The new Apple Watch. Anyway, they make a different decision. They drop off health care, they get sick again, they go back on it. What you're left with on these different plans is a large concentration of people that are very expensive, that have serious medical conditions. Some of them have, dialysis, it could be end-stage renal disease, heart issues, leukemia, whatever. And suddenly, all of our population are paying increased premiums because the insurance companies have to cover the cost of this high concentration of people with serious illnesses. So by having a reinsurance pool of some kind, and I'm agnostic. This is a place where I think we're happy to let states innovate. Alaska has a model where they've come close to 35% reduction in their premiums by taking away the concentration of these very expensive patients. I mean, that kind of stuff, we should all agree. What's Republican or Democrat about that?
So this is kind of listening to you two, it feels a little bit flipped. I've been covering the healthcare law since 2008. You've talked about some of the flaws in the Affordable Care Act just now, or since the debate began in 2008. It didn't pass till 2010. But you've been talking about some of the flaws that I often didn't hear Democrats talk about. You've been mentioning, maybe the mandate's okay for a little while until we work something else. Are the politics of Affordable Care Act changing? Are they stuck? Kind of, what do you think's happening right now, with this law that parties have been very, very divided on for the past, 7 years?
I thought Senator Alexander and Senator Murray yesterday. So there were a bunch of governors that testified to this healthcare panel at the Senate. And Senator Alexander had a great sense of urgency. He really narrowed the focus down. All right, let's just focus on these things like the CSRs and getting them protected for a long enough time. I felt pretty optimistic that something could happen. It was a different tone and a different sense of urgency. And I'm from Colorado, so I don't get to come testify in front of Congress all the time. Not like people from Ohio. But
Who's the lucky one, Joe?
But I did notice, the few other times I've done it, usually there's two sides, and you're testifying on either for or against a specific set of proposals or programs. And usually you're attacked by one side, the senators on one side, you're kind of embraced by the other side. Yesterday, Republicans and Democrats, pretty much every senator, was supportive of what all 5 governors, where there were 3 Republican governors, 2 Democratic governors, and that was we all pretty much agreed on CSRs, on a reinsurance pool. There was that commonality there, and pretty much Republicans and Democrats were supportive. So it felt good. I think he boycotted the statement. Why weren't you there?
They didn't invite me. I was happy about that. Here's the problem. It feels good up there, I guess, at that committee. But the problem is Republicans don't want to be connected to anything that's connected to Obamacare, no matter what it is, okay? And Democrats don't want to be connected to anything that erodes any part of Obamacare. So, all of it is false. I mean, it doesn't work that way. What I think is happening is the public is they're getting fed up. But look, we in our lives tend to focus, in my opinion, on politics, how everything has failed. What about your lives? How's it going in the business world? You read anything about the problems at Wells Fargo? They open up phony accounts, there's insurance. How's that going in the business world? How about in the sports world? Feel good about somebody beating up their girlfriend they play on Sunday? How's that feel? Or somebody who's on steroids, they sit out for a while, then they sign a big contract. Or how about in religion, where we got to find a bunch of Catholic priests that were predators, okay? I mean, think about where your world is. We tend to focus everything on politics, how dysfunctional it is. How's your part of the world going? And my view is what's happening in politics is really just a glimpse of what's happening across our nation. And our culture is losing its way because people are not standing enough on these basic principles that we believe in: personal responsibility, grace, forgiveness, connectedness, all this. And then we see a glimpse of it down in Houston. And we go, oh my God, maybe we're okay. Isn't that what everybody's saying? Maybe we're okay. Well, it shouldn't just take a flood for us to be okay. So I got this reporter traveling with me. She's very frustrated because I keep saying politics is just a glimpse of what's happening. Because we got to get over ourselves and over our ego, although we know we're all hypocrites. I mean, I'm the number one hypocrite. But as I look across the landscape of our country, and I look at the problem of drug abuse, I look at the problem of kids that are teenage suicide, I look at all these things. To me, they're road signs for we got to get it together. And it's not just politics, it's everything. And we got to reassert those values, frankly, that I think come on high, but that are taught in our families. And so much of it isn't happening today. So as you leave, just don't say, oh, well, those politicians are. What about what you're doing? And then what do you do about it? Be a center of something that's integrity and connectiveness and together. That's where we need to be as a country.
Well, let me ask, where you're putting your energy is this plan to fix Obamacare. Why is Obamacare worth saving?
Well, first of all, let's stop calling it this or that. I want to have a marketplace where people can buy insurance. And if people can't afford it, let's give them some money so that they can have it. Because if we don't, then they end up sicker in the hospital and driving up the cost. Why do we have to keep putting names on everything?
What should we call it?
Call it a decent health care plan for Americans and drop all this business. Obamacare. Okay, you're a Republican. I'm going to get you to save Obamacare. You say thank you, but no thank you, right? But if I say we need to have good health insurance for people, you go, yeah, I like that. So down in this town, everybody has to attach a label to something, and it's some sort of a description that drives people in opposite directions. Of course we want people to have health insurance. Could you imagine if you didn't have it? Could you imagine if you were sick and you couldn't afford health insurance? Well, how kind of a life would you have? And so that's what we're trying to do, and that it's not any more complicated than that. We believe in exchanges, we believe in the private market, and we also happen to believe in Medicaid. For those who are really poor, help them out, but get them on their feet. Who's against that?
Well, we saw the House Republicans they did pass a plan that would cause 20 million Americans to lose coverage.
Yeah, that was a terrible thing, and the president called it mean, and I happen to agree with him on that one. There isn't that much I agree with him on, but that one I do.
All right, you just brought up the president. So one thing I wanted to ask you about, we recently saw the Trump administration announce they're going to cut advertising by 90%. They're going to cut in-person outreach funding by 40%. What do you think of that decision? What does it mean for your states? Are you all looking, I know you have a state-run exchange, so you're a little bit removed from those cuts, but what does that mean for the Affordable Care Act? Do you, as states, have to do something to intervene?
Well, certainly one of the biggest issues is how do you get more young people to join, sign up for a healthcare plan. And if you don't like the mandate, what are the other tools you have? And one is to give penalties when someone drops off, when they come back on. Another is to make it attractive to young people. Maybe find incentives, a discount they can get in some way or another through, quit smoking, whatever. But figure out a package to put it together. We've just started really looking at how to use social media. Trusted advisors. So not just your parents, but your coach at your sport at school or a clergy person. But how do you get those people to all encourage young people start talking about healthcare matters? You need to have health insurance because you don't know even if you're young, if you're going to be that one person who draws the unlucky number and really needs, otherwise your life and your family's life will be ruined by your misfortune. And I think that cutting all those dollars from the federal government, again, we both, one thing we started right from the very beginning when we started talking, we said we didn't want to roll back coverage and we wanted to control costs. And we didn't want in any way dilute quality, right? Those were kind of our basic, kind of North Stars. I guess you only had to have one North Star. As a group was our North Star. And I think taking away some of the funding as a way to control costs, we can negotiate that. But these draconian, we're going to cut 90% of this and 80% of that, is probably not the right solution.
We're going to give Ed Sheeran tickets out to any young people that get health insurance.
Is that because I'm going to report that if that's the case?
We're working on that. But here's the thing. I mean, look, they were paying some people who were already being paid, is the way I understand this, giving them money to do their job. I'm not that keen on that, but to just take that away. Let's figure out, look, I'm with John on this, figure out a way in which we can let people know what this is all about. And so I wouldn't make those kind of cuts. There's just no money in it. I don't know who's behind it. Who knows? Bad idea. But if they want to rearrange how they do it, I'm for that because, it's clearly not working very well.
So let's talk about these cost-sharing reduction subsidies. You both in this plans, and it seems like we're pretty decently wide bipartisan support for continuing those. It seems like a lot of the debate is about how long. How long will Congress continue these? Will it just be 1 year, 2 year? What if your states get 1 year of CSR funding? If you get from Congress and the Trump administration signs off, we'll keep paying these definitely through 2018. How much does that help you guys out?
Not much. I mean, then we're right back where we were 6 months ago. What we want is a level of predictability. And any business is going to have their success defined to a certain extent by how well they can understand what the conditions are going to be, not just 3 months or 6 months from now, but 12 months and 24 months, because they have to make cost estimates on what they're going to charge for all these different plans that they offer. And in many cases, they're not going to really know how well they've done, how carefully and how successfully they've analyzed the market until, probably 18 months from now. If they're going to lose or have the potential to lose a small but still significant part of that analysis of that algorithm, they're going to be cautious and they're going to go towards the higher premiums. And that's been part of the problem all the way along.
Look, John and I are both committed to something. We want to do away with quantity medicine. We actually want a market that rewards quality, not quantity. So, in our state, for example, in Medicaid, people are in managed care. Now, it's not the old managed care where we just say no. It's legitimately coordinated care. And our Medicaid costs have gone from 9% to 3%. Now I think it's actually like 1% this year. Is that right, Greg? I mean, we're growing our Medicaid at 1%, but everybody's got coverage. Isn't that unbelievable? Frankly, that's what ought to happen with Medicare. Instead of fee-for-service being the default option, the default option ought to be managed care. I mean, then it saves money. We prolong the program. But John and I want to move to and we're doing it in Ohio. They're starting to do it in Colorado, and that is pay for performance, pay for quality, not quantity. And we actually provide bonuses to primary care doctors now who can keep people healthier than what was anticipated. To be able to move in that direction. And by the way, in the area of Medicaid, I'd like to be able to have more control over my formulary. I don't want these high-priced pharmaceutical drugs. I mean, I don't want to bash all the pharmaceutical companies. We need them, but I also don't want to be gouged. So I think there's a way to get there on that. These are the kind of reforms that we both agree with, and that's the long-term solution for healthcare. Quality, not quantity. Manage something. make sure that your primary care doctor can move you through specialists in a way where you get good treatment. I mean, that's where we have to be. That's the market. The problem is we moved away from that to a quantity system, and we're getting exactly the way the system was established. So with these payments are all designed to provide stability, make sure people can get some subsidy if they can't afford the health insurance. That's fine, and let's just move on and start to stabilize healthcare in the longer term.
Are you guys worried right now about insurers leaving your markets? I know Ohio had some empty counties that have been filled, but I'm curious, we're getting very close to that September 27th deadline where insurance companies have to say, am I in, am I out? The CSRs still aren't funded. How much of a concern is that in your states?
Okay.
Well, I've got my insurance director back here, Jillian. I think we're okay now. I know this, that when we had those empty counties and this one company agreed to pick up insurance, they got more good publicity in 1 week than it had in the last 100 years. So I think they're staying. Jillian, are they staying around?
I think the lack of clarity at the federal level is still making them nervous.
One thing I would say, we have 14 counties out of 64, so almost a quarter of our counties that have only one carrier, and I will give them free Anthem. Love Anthem. What a company. What a company.
But Anthem's been exiting, or they've said they're going to exit Maine.
They exited some counties,
don't
but
get the CSRs.
they stayed with others, but without CSRs. The notion that this is somehow a give back, the bottom line is these insurance companies have to make a profit like anyone else, and if they can't, then they leave these counties. And part of what we've been talking about is trying to figure out what are the other incentives, can we do? Should people in these counties where you only have one carrier, should they be able to have, should citizens there be able to join up and get the same, the federal employee health benefit program? That's a classic example. Won't serve for a lot of people, but it's more coverage than a lot of people in rural areas want, but at least it's another choice. And can we give tax incentives to get a second carrier into these places? And obviously we give the tax incentives to the incumbent as well, but competition is always going to get you lower premiums.
We need healthier pools. So one of the things that we think about that would be provided for if we had this town could actually function is we'd like to take people between 100 and 138% of poverty on Medicaid, those who are healthy, and we'd like to move them into private insurance. It would make the pools healthier. It would reduce the costs for everybody. I mean, those are the kind of things that we think really make a heck of a lot of sense. You could leave the sicker people on Medicaid, but take the healthier people, move them over into the private insurance, which I think Republicans would like. I think we're for private. But these are the kind of things that will come with the plan that John and I have. It's pretty comprehensive, so maybe it's too much for them, but we'll see. No, it is. It's comprehensive.
Well,
it may be too much.
Yeah, to follow up on your point about solutions for one carrier counties, bare counties. These sound like some bigger ideas, and we're I think 53 days away from the start of open enrollment. Are these ideas for next year, or what do you think about with these counties right now? It was mentioned in the last panel, we have 70 counties in Virginia, or 60 counties with 70,000 people, where we have no carriers signed up for next year. It seems like this risk kind of exists everywhere. What happens in those places?
Well, I think CSRs right now will have a material impact on that. Might not solve it for every county, so there are going to be some counties where you've still got a real problem. Each governor has to deal with that with the tools that they have. But CSRs are a definite part of it that could be done in the next few weeks, literally by the end of the month. Same thing with reinsurance, right? Maybe you do the insurance through broader waiver applications on there. So waiver applications can happen in real time. So the experiments in Maine or in Alaska can be replicated very rapidly. But those can have material impact in real time.
Yeah, he's right. And the other thing is, when you give states flexibility, you also want to have some guardrails. Because you don't want people to just get the shaft here at the end of the time because somebody's playing some kind of politics here. So the guardrails are important. Guardrails are important in Medicaid. Guardrails are important in healthcare, but they shouldn't be so strict that it prevents innovation. I mean, innovation is really critically important, but at the same time, there's limits to anything in life.
Mm-hmm. So let me ask you one other part of your, and this is getting pretty nerdy, but we're just going to go for it. One other part of your proposal deals with 1332 waivers, which the idea is states can apply to have some sort of different program that covers the same number of people at similar cost or even more people. You all talk about some more flexibility in those programs. I was curious why focus on that when we haven't really seen states using those waivers. Vermont tried to and failed with its single payer proposal. We've seen some reinsurance things that have been possible in Alaska and in Minnesota. What's holding states back about 1332 waivers? If you get this new flexibility, are we going to see
Well, it's because they don't
more of
think
these?
they're going to get one. So if you can actually clarify through the Congress that we expect, again, this flexibility within guardrails. Again, we're back to this issue of comprehensive. I don't know if you understand what I meant by that. Comprehensive is defined today by you have to cover everything that's in this essential health benefits. Well, if I can give a 23-year-old what I said earlier, catastrophic, medical savings account, and primary care, why do I have to give them maternity coverage? They don't want it, okay?
So, if they're a 23-year-old, they might get pregnant.
Well, then they can get it if they want it. But
usually insurance companies aren't going to sell a pregnant person maternity coverage.
You never know. But here's the thing. What I'm suggesting to you, you shouldn't have to comply with every one of those essential health benefits. I can design a plan that can cover me and take care of all really of my needs, anticipated needs, without having to go from A to Z. And so that gives me the flexibility to put something in, but it has to be defined as comprehensive. I think that giving somebody who's 23, and you give them a lot of choices. They can have a health savings account, they can have catastrophic, they can have a more inclusive plan, what they will pay more for, okay, that would include all that. But the fact is that as long as we have common sense interpretation of what comprehensive means, it's all cool. And that's what we really want to have. And that's why it was so important that we still had the guardrails. Well, at the same time, we're saying, please start giving these states waivers and let them innovate, and then we can learn. See, that was the compromise. If you're a state and you want to have all these essential health benefits, fine. You can add more. We don't care. If you want to do that in the state, go do it. But if we want to have something that is a reasonable approach, then that's what we're looking for. I can give you one example. Right now, if you're on welfare, you have to work 30 hours a week. Nobody knows this. If you're able-bodied, you get a payment, you got to work 30 hours a week. We went and asked the federal government to allow us, both the Obama administration and Trump administration, to substitute some of the work requirement for getting your GED. We have been told no. Okay, I'd rather you flip this paper around and get your work requirement than get a GED so you can get a job. Okay? It's stupid. So what I'm suggesting is common sense direction here is what we need. We've lost common sense in too much of it. So these waivers are important, but we just don't want the Wild West. We want some limits in terms of where people can go.
Right, most of what we were pushing on the waivers was to simplify the process of getting them. And there are a bunch of places where if you didn't have to wait 18 months, I mean, that really is intimidating for all of us. But things like the so-called family glitch, so that if you're working for a small business and they can get, if you're an individual and you can get incentives and tax benefits, tax credits if you sign up as an individual, but as soon as you're a family, it doesn't matter how much you're paying for your insurance, you don't get anything. That you would, if we can't fix that in Congress, then that would be a place you'd ask for a waiver. The same thing with a mandate, right? If you don't like the mandate, there are a bunch of different ways you might be able to get revenues that make a mandate less important. Or maybe you modify the mandate. You go up to 500 employees. Those things all have to be done through waivers, and the waivers are a huge pain in the neck.
So let me ask you, we're going to open it up for a few audience questions, but I want to ask each of you, you've spent a lot of time talking about all the things you seem to agree on healthcare. What is one area where you disagree on health policy?
See, I don't like to answer those questions because that's exactly
what happened.
That's exactly what happened to the Beatles, right? As soon as they started worrying about what was John Lennon, what was Paul McCartney, all of a sudden, a year and a half later, it was all in the trash heap.
But it's true. I'm sure there's areas.
He's exactly right. And I thought Harrison always got screwed. I mean, the guy could sing. No, why would we think about that? You know what, John? Here's the thing: you learn when you're a negotiator. Anybody here ever negotiate anything? Anybody in this room? Okay. If two sides want to come up with something, then there's really no obstacles. You just work your way around it. I mean, that's not that hard. I mean, there's some things that can't be negotiated. You walk away for a while. But you know, if you have a will, there's a way. And boy, I think that's a good. There's a will, there's a way. I'm going to write that down. That's but you know what I'm saying.
that in
We
my
don't
Kasich
disagree. We have John and I have fun. We actually have fun. We like each other. We have a great time, you know? So what is there to fight about? I mean, just get through it.
Let me ask this another way. Are there places where you started at different points and said, you know, I believe this and I believe that, and kind of came to
The
an agreement?
individual
in this
mandate
plan?
was always a problem, but we figured out a way around it. Or, you know, how much waiver authority. I mean, all that, yeah. But we got great. Kyle and Greg did a fantastic job, and but it was because John and I said, go get it done. Figure it out.
Kyle, you can wave. Stand up and wave.
Where's Kyle?
Right
I mean,
there.
isn't that right, guys? Kyle and Greg, say something. Isn't that how it worked?
Yeah, you better say yes.
But so the individual mandate, how do you start that discussion, and like how does it end up like the proposal we have in the plan you released?
Again, they go back and forth, and when they get kind of boxed in, they come to us. Well, I think that's fair to say. And then we sort of sit down and talk about it with our staff and say, well, have you talked about it this way or that way? Can we look at it from a different perspective? And a couple times we've talked to each other directly on, you know, in the middle of kind of trying to work towards a specific letter or this specific proposal. But generally, our staff has done, in all fairness, 99% of the work.
Yeah, and look, it's not that hard if you're of a mind to get something done. Again, I mean, you see it happen, just not complicated.
All right, I think we have a few minutes for questions. I believe there are microphones back here. So why don't we start with you here? If you could just keep your questions. We only have about 15 minutes, and I'm sure a lot of questions. So please keep them relatively brief and tell us who you are.
Hi, I'm John Stanford with Prism Group here in D.C., but a Colorado native and a big fan of the governor's. We represent a lot of the small business community, the perennial losers, pre-ACA, post-ACA. The small business community really struggles to deal with health care for themselves, as you noted, and their employees. The conversation today has really been a debate about stabilizing the insurance market. When I talk to small business owners, they don't want to have that conversation. They want to talk about why are the health care costs going up? So my question to you is, after we get past September, is there a 2.0 where you two will go around, and Governor Kasich addressed this today, how are we going to address healthcare costs specifically? Not the insurance debate, but will the two of you be moving forward to tackle healthcare costs?
Are you guys going on tour?
So can I go first?
Yeah.
So we've talked about this, and you know, in the periphery, when you're trying to get a negotiation done, you focus on the negotiation. But there's some real basic stuff. Transparency is my big. I mean, you can go into a Walmart and they've got whatever it is 80,000 SKUs, individual colors and sizes of products, every little widget, every Framus, and it's all digitized. You know what you're going to get, what it's going to cost. Somehow we can't do that with our healthcare system. You can't go into a provider and see what a broken leg is going to cost, or a broken arm, what stitches are going to cost, or a heart operation. So that's a huge thing. I'll let you talk about the pharmaceuticals. I mean, there's a list of stuff that we're long overdue to just saying, all right, enough's enough. This has been going on for 40 years, and it's pretty clear of some ways we can make significant large strides. Let's do it.
Well, I mean, John and I are probably working together on a bunch of things. I mean, why not? And we'd have to figure out what it is we want to do. He came to me on DACA, I think, on one of those proposals. Now, there was a case where we kind of disagreed, because I don't think we can. The DACA problem gets to be complicated if we make them citizens as opposed to permanent residents. But, I mean, DACA is one that ought to be fixed, like, immediately, right? In terms of health care, what I would push for, I actually got a call from the president after he was in. I went down to the White House and I said, look, I have limited leverage when it comes to what I have to put in my formulary from pharmaceuticals. So give me more leverage to exclude things, so if I can have leverage, I can get the prices under control. We're working through a whole series of things in Ohio to pay for performance rather than to pay for quantity. So I think if we can come up with 5 or 6 or 7 simple things, then I think John and I could go forward and write to some people down here and around the country about what we think makes sense. There's an unlimited opportunity to work together. You know what is so amazing to me is like she's got all these questions. Well, how did you actually work together? Like, it's not that hard, you know?
It's very strange for us here in DC.
Well, it didn't used to be until everything started sliding, because it's now all about me and not about anybody else.
Let me ask you about that call from the White House. Do you get, Trump came in talking about negotiating Medicare prices for drugs. Do you get any sense from the White House that's an issue they're still interested in, some kind of negotiating power for Medicaid when it comes to prescription drugs?
No, I haven't had any contact from them saying they want to do that. That's a big issue. I mean, they did this, what is it called, the Cure Act or whatever, and nobody seems to be focused on this, the cost of pharmaceuticals. No, we don't want to break these companies. We need the R&D on and the development of these drugs, whether it's mental illness or whether it's some of these chronic diseases. But at the same time, I'm disturbed when I hear that there are drug companies that spend more money on stock buybacks than they are on R&D. But that gets to be another matter of values, doesn't it? Yes. Thank you. I'm going to take you. I like you, whatever your name is.
Yeah, right over here.
Hi.
Yeah.
Molly Fishman with Congresswoman Jackie Spears' office. For both of the governors, you both talked about the need for, getting everyone to have insurance, because you never know what's going to happen. And then, you also talked about, the needs of insurance at different ages in your life. How would you reconcile that? Certain things, like you said, you can't predict when you'll need insurance, but you also can't predict what type of insurance you'll need. For example, you could be 23 and get cancer, or get pregnant, or get in a car accident. And my understanding is that kind of cherry picking what type of coverage goes into certain plans makes certain coverage more expensive, that's more comprehensive. So how could you see a way to kind of reconcile those two things you've talked about needing?
So Governor Kasich.
Well, I mean, it's first of all, in our state, we have a robust insurance market. To be honest with you, that what they passed in Washington with the restrictions on the rating bands and everything have made us less competitive. I mean, that's a problem. What I'm suggesting to you is you get choice. Just like you're a federal employee, you get a choice, right? You pick what you think works for you. The key is that you pick something. And that's why we're back to this word comprehensive. Now, if you're a 23-year-old woman, you might want to have maternity coverage. If you're a 23-year-old man, you might not. I mean, let's not get hung up on that one. Let's think about what you really need. And if you're 23, 24 years old, if you have catastrophic coverage, that's pretty good. If you have a medical savings account that allows you to pay down your deductibles, that's good. If you are guaranteed access to primary care, that's pretty good. You don't really need a whole lot when you're 23, 24 years old. So give people choices. And as you make these choices, frankly, it's going to bring costs down. And as costs come down, the pools get healthier. And as the pools are healthier, that brings costs down again. And so that's kind of the direction. So I think you should have some choice about, just like you do as a federal employee, right? You choose what kind of health care you want.
I do, but some of those choices, if all plans don't have at least some core benefits,
yeah.
will be much more expensive.
Well, that's why I think there has to be, I agree with that. There has to be some sense of the core benefits. That gets back to the definition of comprehensive. Okay. You see what I'm saying? Look, you and I can decide what's comprehensive, couldn't we? It wouldn't take like 100 days to figure that out. That looks comprehensive, that one doesn't. That's what regulators do. Here's the other thing, by the way. People talk about buying insurance across state lines. Everybody in here is for that, right? Okay, that's right, because you're smart. Because what that means is somebody comes from out of state and offers some ridiculous plan at some really low cost that disrupts your market. I believe in state insurance regulation. So that allows us to determine, Jillian determines what is reasonable here in the state, right, Jillian? That's her job. And so I think when it comes to what the definition of those plans ought to be, state regulators ought to put some limits in there, some guardrails.
All right, do you have anything right here? Yeah. Oh, right back there. Yeah.
Just yell.
Yeah.
Hi, Carrie Allen with the RAND Corporation. We've looked at some proposals that would remove some of the essential health benefits from the regulations and what impact that would have on premiums. And so I was wondering if you could talk, you've mentioned maternity coverage as one example. I was wondering if you had a sense of what EHBs you would be open to removing and what sort of impact you would see on premiums as well as out-of-pocket costs for people that do use those services. Specifically curious about substance
the answer
abuse.
for me is pretty simple. I can't tell you exactly what that would be. The way I would work is I would sit down with Greg and Jillian and Beth, my chief of staff, and some other of the folks that work around me. We sit down and say, okay, what do we need here? The same way we decided we wanted to expand Medicaid. We kind of looked at what we wanted to do. We actually want a skinnier Medicaid package. But they would come in and say, we think this is reasonable, this is not, and we'd look at it in a very minute way. I mean, John and I, look, John is a successful businessman. We don't do this thing just like at 30,000 feet. We want to know right down here what's in it, and then we would work through it. If, in fact, we could skinny down the essential health benefit package, but yet still be able to provide people their insurance, there isn't any question the costs come down. That's part of the reason why costs are so high, because everybody has to provide this ABC list. So in terms of what is it that would be on, Greg, you want to say anything, or Jillian, about what might be what might be jettisoned? I mean, seriously, tell them. But are there some of those provisions that you say we ought to consider that we don't need this?
Well, I think in our proposal.
Good job, Greg.
Well, what do you actually? Can I ask a question to follow up? What do you think about the essential health benefits? Are they too onerous for your state, or do you think they're kind of like a good set of core benefits?
No, I think that the essential health benefits is defined. That was a huge, long process to get to those benefits, and if we're going to change them, you're going to have to go through another huge, long process to negotiate that out. I'm not saying that can't happen. Our focus on our proposal was really how hard it is to get the waivers, right? The 1232 waivers just take forever. And that's, if one other state, if Alaska's already done a stability fund and it's worked and they got their waiver, why should it take us 18 months to get the same waiver? That has been our primary focus in short real time. This is like transparency, to go and change, reevaluate the essential health benefits. That's a big process.
But let me kind of tell you the way I think about it. I expanded Medicaid. Okay, I was really the one from the big state, the first one to do it. Why did I do it? Well, first of all, we got our Medicaid under control. How did we do that? I said we're going to stop giving all this money to these nursing homes because we're too high. Our rate of reimbursement is too high, and I'd like to have home health care. And so, then we think about, okay, what do we want to do with mental health coverage? What do we want to do with coverage for those with chronic disease? What do we want to do with treatment for drugs? You have a sensitivity towards people. That's a key part of this thing. So when we would sit down and think about what are these things we want to change, we would always keep in mind the customer, that is the person. And what is a reasonable package for them to have that isn't going to leave them in a lurch? Because my fundamental view is you don't want to have anybody out there being really vulnerable, and they can't protect against everything, but what's reasonable? What makes sense? What puts us in a position of where we can begin to control these costs? Because frankly, if we don't control the cost, the thing's going to come crashing down. So what's reasonable? And that's the way I think about it. And then we would meet in my office and we'd go through a list. And I would say yes, no, whatever. For example, on essential health benefits, we made sure we could submit our plan. I wanted to submit a plan to make sure that our people provided insurance coverage for autism, okay? There was a place I thought was critical. Small businesses are like, oh, you can't mandate any of this stuff. Well, I can mandate that one. I think that one is one deserves being mandated. Is there something that shouldn't be mandated? Yeah, but I need to look at it, okay? And look at it with a brain and look at it with a heart. That's kind of the way we do things.
Here, right here. And I think this is probably our last question, unfortunately. No pressure.
Hi, thank you. It's Leslie Page with Citizens Against Government Waste. I think a lot of this discussion is very interesting about the essential health benefits, but what's missing in this, in my opinion, is that everybody here is deciding this from the top down. It's either the feds or the governors instead of the states and the consumers and the patients. What an essential health benefit would be for a patient, I don't hear anyone talking about. I mean, that's why the choices have to be so much wider. Patients have got to go into a market and be able to pick on a lot of things. And some people may not want autism. They may not need obstetrics. They may not want to pay for pediatric dentistry. But no one is talking about that. This is a bunch of politicians making decisions about what everyone else's essential health benefits are. That, I think, is a big problem. And you can either do it at the federal level or you can do it at the state level, but it's still, it's still people at a higher level making decisions for individuals and patients all over this country.
All right,
now,
so I'm just gonna, since we have to wrap up in a
I
few
appreciate
minutes.
the work that everyone has done on this, but it seems to me we're still in the same position we were before.
Governor Hickenlooper, what do you think about those comments?
Well, ultimately, and at least the way we do things in Colorado, and I don't think Ohio is that different, we go out into the community. Our insurance commissioner has hearings. They solicit input from the medical community, the healthcare providers, the pharmaceutical, you name it, the insurance companies. Try to get everybody, and then public testimony as well. And then ultimately they come up with a recommendation to the governor, and we decide. That's kind of how democracy works, right? I mean, there's not a really good other way to do it in such a way. The trick about some people saying they don't want autism insurance, which I understand, right? And I'm with you on the autism insurance. People don't think it's ever going to affect them, and somehow there's got to be a way that we cover that for those people that draw the unlucky number.
We were just running out of time.
You've spoken perfectly. I hadn't heard of the Citizens from Against Government Waste since, what the heck was his name that put that together? He was dynamic. He would be proud of you. Well, look, first of all, these things get decided through the marketplace in our state. That's how it gets decided. This is not coming on top. This is what the consumers want and need. But every once in a while, when it comes to, like for our state employees, I wanted to make sure they had access to autism coverage. I had a way, okay, what is the dramatic increase in the cost? What is it going to cost our state employees? And I have to make a decision. That's why I was elected, to make that kind of a decision. But we fundamentally drive what is wanted in the marketplace, not by politicians. It's driven by the market. The insurance companies decides what options they want to put in our state. That's how it works. And there are always, you've got to be properly capitalized, things that come along with it, because we don't want to be in the Wild West. But obviously, we need a healthcare system that is more consumer-driven and not driven by quantity, again, but by quality. So, as long as you have a robust marketplace, you're okay. And I favor more choice. And the reason why I'm here, the reason why I'm arguing this side of things is that's what Republicans want. They want more choice. They want more power to come from the bottom up, not the top down. And so I think the plan that John and I put together achieves that.
Democrats also.
Okay.
Just for the record.
And it might, and that's probably true. Although if you look at Bernie and single payer and all that, that wouldn't be the case. But there's, I guess, some Republicans don't want any of this stuff. Okay, I don't agree with them. You see, what we've done is we've used common sense to come up with something that we think can stabilize the market, move us in the right direction, with a plan yet to follow in terms of the driving costs of healthcare. And I just think it's eminently reasonable. It gives a liberal an opportunity to stand with the Affordable Care Act. It gives a conservative an opportunity to design their own plan in a unique and innovative way within certain guardrails. I don't know what could be better than that. I don't know. If you could figure it out, send it to us, and we'll add it. Okay?
We'll send it to Greg.
Send it to Greg.
Well, thank you so much. If you all could just stay seated for a few moments while the governors exit. Governor Kasich, Governor Hickenlooper, thank you so much for joining us here today.
Thank you.
Thank you.